Hi guys, welcome to the 10th episode of Trading for Beginners. So in this video I'll be talking about chart patterns of interest and how they can change the way you look at the markets or the way you trade. So for chart patterns, you need to correctly identify these chart patterns, as you can use them to identify a change of trend. You can identify breakouts. You can identify areas of manipulation. So the goal is to spot big moves before they happen. So you can actually anticipate some of the chart patterns, especially if you understand the concepts of the way the market moves, like I explained in the last video. So let's say you are a Btmm trader. If you are in level 3, you can now expect a change in reversal, a change in trend direction. So you start to look forward for chart patterns which coincide or are in support of the way you are viewing the market at that particular time. So chart patterns, they are usually points of interest, and in this video I explain that we can actually see these chart patterns on what we call peak formations. Peak formations, guys, peak formations. So the chart patterns which I'm going to cover in this video is the double top, the double bottom, and the head and shoulder. Like I explained in the previous video, the market will form something like this, which will be a peak. It moves impulsive wave, retrace, impulsive wave, retrace, and then give a chart pattern there, which it can continue to go down, or it can do this peak formation, which I said here, it can be a double top, double bottom, or a head and shoulder. So it can impulsive retrace or corrective moves, impulse, then it may form a W, and then form a W and continue going up. So to clarify, we have to start from the basics, guys, so that when I talk in the future videos or the videos which I'm going to release at a later date, I will be explaining now in deep and how you can actually use these patterns to be profitable. So very important facts, these are usually called peak patterns. Like I said, they are formed at peak formations. Peak formations, guys, peak formation. And these patterns which you are going to cover, they signify trend reversal. So you can actually predict that the market will reverse when you see such patterns. So they are not, so for most people, they are not really easy to see. Hence, people use moving averages to spot them. If you don't know how to see a peak, I'll show you in my way and how I simplified the things. So at peaks, like I was drawing, you can find double top, double bottom, head and shoulder. Like I said, this will be just a peak, lower high, lower low, lower high, lower low, and that's it. So we're saying at the peak you can either expect a double top, a double bottom, or a head and shoulder pattern. So these are some of the patterns which you can use. So a double top, this one they mean trend reversal. So they will appear like this, and then you've got first leg, which is this one, and second leg. So you can either enter there, or you can enter there, or you can wait for a pullback to enter there. I hope it's clear, guys. So a double top is a reversal pattern that is formed after there is an extended move up. The tops are peaks which are formed when the price hits a certain level that can't be broken. After hitting this level, the price will bounce off it slightly, but then return back to test the level again. If the price bounces off that level again, then we have a double top. Then you can now what? Go short. So we've got this, you're watching the market moves down, and then you draw your imaginary support, and then price come back here, and then it fails, or it forms a pin bar like I was explaining in the previous video. You know that price will definitely go down. Or if you are not really sure, you can draw a line there, and then you wait for price to retest, and it continues to go down. So a double top will look like this. An M, this will be an M, it forms double top, and then price goes down. A double bottom, the double top is also called an M pattern. There's two legs. Double bottom, it is also called a W formation. It's used to go long when you want to buy. So same explanation applies, only that this is an inverted M, so it's a W. So occurs when price has been going down for some while. These formation occur after extended downtrends when two bottoms have been formed. So this is what a W formation will look like. So a head and shoulder pattern is also a trend reversal. So the reason why it's called a head and shoulder, because it will be like this, and then we've got the head of a person, then the shoulder, and then the body. So shoulder, head. So the reason why it's called a head and shoulder, so head and shoulder will look like something like this. So head and shoulder. So sometimes in order for you to see that this is a head and shoulder, this is an M. M's and W's are the easiest pattern which you can see. So on this diagram here, price formed a what? An M. So if you want to use, you can use other moving averages. There are plenty of them, but I like the 50 moving average, the exponential moving average. So you've got price doing that. So price touches the 50, and then it goes up on the same level, and then it comes down. So this is an example of an M formation which you can use, or a double top. This you can also use to see a W. So you see something like this, touches there, it comes back down, touches there. We are going to talk about entries. For now, don't worry, we should just learn the basics. This is an example of a head and shoulder. So we've got shoulder, head, shoulder, and then price moved up. So thank you guys for watching this video. Please subscribe, like, and share the video. Thank you. Have a nice day.